Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea, a more than eventful Tuesday. The geopolitics folding over to geoeconomics, folding over to, it's the first day of the fourth quarter of this year. Where did September go? Where did sell in May and go away go? We did some equity coverage, but I have to admit the focus is on news flow and focuses on a bigger, broader picture. We'll try to get a little more granular here as we go to the jobs report this Friday. And, of course, labor is suddenly what the Fed is looking at. I guess they're looking at inflation. We talked to Matt Luzzetti about the movable feast. Matt Luzzetti is with Deutsche Bank. Here he is on the Fed.
I think the first 75 to 100 basis points, likely 100 basis points, is straightforward. Our view is that the neutral rate in nominal terms is 3.5%. So getting down close to 4%, I think, is a straightforward move from their perspective.
So another 25 each meeting, do you think?
25 each meeting. I think the potential, if you get a softer jobs report, they would have to go 50 again, or they may choose to. But at the same time, I think once they get 100 basis points, and if the economy continues to look strong and the labor market stabilizes, it becomes a greater question at that point.
Matt Luzzetti, we really thank him for his New York Mets analysis. For those of you worldwide, this is the best time of year for this American distraction called baseball. The World Series, and when I was a kid, only two teams made it, the National League, the American League, and they played 4 out of 7, the best of 7. And the season ended October 5th or October 10th, whatever. Now we've turned it into an extravaganza, and the beginning of the extravaganza is the wild card derby, which is the best 2 out of 3, and the game totally changes. So I'm sorry, today on Bloomberg Surveillance, Michael Barr was not focused. Matt Luzzetti was not focused at Deutsche Bank, and we'll go on from there. Had a wonderful visit today with David Salem of Hedgeye. Many people upset at the length of the interview. We had to look at the port strike, of course, East Coast and Gulf Coast as well. And we'll get Mr. Salem in again for an extended 2 blocks. I promise that. Try to get him in as soon as we can. David Salem is venerable, to say the least, and I know he really speaks his mind. David Salem on the illiquidity of private equity and private credit.
The single sentence response to what you just said is that almost every effort in the history of capitalism to transmute illiquid assets into liquid ones ends in tears. I could stop right there. But so the business model, and it is a business and a revenue model, that private equity, private realty, private infrastructure, and other managers, their household names today, have set atop otherwise truly sound enterprises, is flawed. And it raises a really important question as we seek to democratize access to some of these private forms of investing. Are we actually doing folks a favor? They're clearly much higher cost forms of investing. So I have serious concerns about that. I just alluded to it. The bottom line is people have taken a very sound model that was idiosyncratic and entailed a great degree of discomfort when it was first designed by David Swensen, and they've taken it way too far. And Wall Street, you know this, Wall Street tends to do that with just about everything it encounters.
David Swensen there of Yale University. David Salem, speaking of being a young buck and running into David Swensen, I think at 31 years old, as he had reinvented endowment investment. To translate what you just heard, if you buy a share of Apple, you're pretty confident you can get out of that puppy at a gain or a loss. And the liquidity is quite simple on the bid and ask. Good, or even great. Good morning, Arthur Levitt, for all you did for liquidity. If you have a bar of gold or a gold Krugerrand or whatever, you can probably sell it. It's liquid, I guess, at the right price. But what about alternative investments? The idea of getting out of venture capital, getting out of private equity, getting out of private credit. And that is a point of debate. We'll continue to cover this well into 2025. David Salem of Hedgeye there. We're out on YouTube. Subscribe to Bloomberg Podcasts. I don't have the September numbers yet, but they told me they're phenomenal. Thank you so much for our entire team as we all learn about YouTube in our homes, in our offices, the ease of doing this at Bloomberg Podcasts, on YouTube, on your commute, under new technology, Apple CarPlay, Android Auto, seeing Apple CarPlay more, and again, it's international as well, Sirius XM, good morning. On the corridor, 92.9 FM in Boston, Bloomberg 1130 in New York, down to Washington, 99.1 FM. A special shout out today to Dan Williams of our Tel Aviv News Bureau, coming to us from the border of Lebanon. That is, we heard very difficult news that moved markets about the 10 a.m. hour. On YouTube podcasts, on Apple Podcasts, this is single best idea.